Good morning. Good morning, YouTube. Good morning, YouTube. How are you today? Good morning, YouTube. Good morning, YouTube. How are you today? All right, let's see. A little bit out of focus here. Let's make sure everything is good. All right, sometimes I get lost. Okay. Let's see. Okay, so let's go ahead and start the show. This morning, we're gonna approach the market the same way that we always do. Let's go see ahead and see if we can find some news here for us this morning. News. Well, we're looking for the news. All right, so today we have May 22nd. We have existing home sales at 10 a.m. We're looking for 3.9 and we're coming in at 4.02. I mean, with previous was 4.02. And that this number is probably going to be I hate to say it, it may be just a little bit lower than 3.9. We're forecasting 3.9. I think we're going to come in lower than that. But we'll see how that goes. We'll see how that goes. Okay, let's go ahead and look at the charts, trader charts. One thing that I noticed about the effects of back testing that I've seen recently for myself especially is that yesterday I came in and I had an analysis that I thought, I believed that the market is going to do a few things. I saw a few target areas that I believed that we were going to reach. And as it turned out, toward the end of the day, once I checked my list to see whether or not we reached those levels or not, we did. We reached every area of liquidity that I had marked out. And I had marked them out and I did not do them sequentially, but I think my list was pretty close to that. So the back testing is working, right? And I think that that's one of those things that um we always have to remind ourselves whenever we even begin to back test is that yeah, it works. It's not fun all the time. It's not fun all the time, but it works. The market is open. The market is open. I took ICT's advice and I separated all of the trash that was normally on my screen. I took it all off the screen. On some screens, I have certain levels that I'm watching. On other screens, I have gaps. On the other screens, I have my daily gaps and my new week opening gaps. Let's see, what else do I have here? I don't have the first presented gap list yet. That's the only thing that I'm watching for and waiting and looking for is the first presented gaps. Right now, as we just opened, we're at consequent encroachment of the London session, roughly around consequent encroachment of the London session, and just below the high of last night's Asian session. So we're just below the high of the Asian session. In the pre-market, we ran to a previous Asian session low and we tapped it. And it was one of those significant ones that we've been watching. Then we dropped down. We took out the liquidity below the opening price here in London session. We took this liquidity out and then we popped right back in. And consequent encroachment of London is roughly here. This is the high of London is here, right? London's high is here. We ran the high of London prior to the market, prior to the pre-market. So right around 7 a.m., we took out that London high. We took out the London low. We took out the Asian session low. And then immediately, right before the market opens, we have this strong rally to the upside. And boom, body close here, wick to this imbalance. This wick pops up into the wick of this up close candle, and then we turn over. This is the 1 minute chart. There's really almost no difference between where we closed yesterday and where we opened today. So there's that. We'll go ahead and jump to regular session trading. And here's where we closed. Here's where we are opening. Okay. There's this up close candle here. I'm gonna grab this level, pull it to this level, pull this forward. Now, do I believe that we're gonna invert this, or do I think that we're gonna drop all the way down and continue to the downside? I want to think that we're going to continue lower. But I'm looking for that first presented fair value gap before I get involved in price. Once we pass the consequent encroachment of this range, then I'm seriously thinking bearish. Yesterday, when we began, I said, you know what I'm not going to do? I'm not going to trade till 10 a.m. Today, I have to hold on to that conviction that not trading before 10 a.m. is still going to be the right thing to do. But I also believe that we might very well see a continuation of yesterday's movement to the downside just early on. Excuse me. I'm just looking at the accumulation that we had through Asia and London. Nice level of accumulation. Just prior to the market opening, then we dropped to the downside. There's a imbalance here. And what I'm looking at on the left-hand side is the 15-minute chart. And one of the things that I'm really looking for now is the AMD. So I'm very watchful now for AMD, right? So the accumulation and manipulation and distribution, right? So if this were accumulation, is this manipulation, right? Or accumulation, a true tale of the direction we're going to, manipulation, and then we would have to wait for the distribution. Now, the hard part is for me, and I say hard part, and I don't mean hard for everyone. And I think that's the part that we're talking about. Not hard for everyone, but um, the part that's unfamiliar to me at this point is, look at that. Oh, look at that. You see how we dropped down below it and traded right back up into it? Oh boy. Oh boy. Is not trading for 10 a.m. a rule or just a suggestion? That let's really ask because this is kind of what that looks like to me right now. I mean, that's not a bad trade, but I didn't take a trade. I substituted a trade for this marker. Yay, Grady. Clap for yourself, buddy. Clap for yourself. Excuse me. Mm. Allergy season is popping off a little bit. And as allergy season begins, my nasal passages just go wild. Um, yep. Just all sorts of what do you call this stuff? Pollen, burning car fuel, um, all of that sort of stuff, especially environmental, not environmental, natural pollen, hay fever, and all that sort of stuff. I can deal with. But if I'm in traffic and I'm sitting behind a few 18 wheelers and or sitting around a few in cars where the engines are not burning the fuel properly, and I inhale that, yeah, I'm gonna be out of there. I cannot, and I can't deal with pollution. Mm, mm. So if we take this and we also look at let's see if we'll do this like this. Sometimes I don't need all four. Sometimes I just want to see two of them. Sometimes I just want to see the 1 minute on one side and like on the other side, just like a 15 minute. Excuse me, just to have the relationship between the two clearly visible. This is the I'm not taking a trade before 10 a.m. marker because this ends at 10 a.m. And it's also uh just a recorded proof of, you know, sometimes your rules are the only thing that's protecting you, and sometimes having those rules are the only things that's going to protect you. Those two different things sound like two different things, but they're the same thing. Because what we really want to have is we want to have, and it's a great word I heard used by another trader. We really want to have conviction, and the conviction is not necessarily always about whether or not the trade is going to go a particular direction or not. But the conviction is also that I also believe in my strategy, my trading rules and policies as a trading business owner. I'd like to have some background music playing during my stream. I don't want to hear it, but I think that it'd be just nice for people who watch the video later, that if they were, to just kind of scan through it a little bit, I wouldn't just be sitting here with silence, like, with my fan going in the background. 9:39 a.m. The dotted level above us was how would I put this? Let's see. When we dropped down here last night, I believe this is Monday's first presented fair value gap is roughly in this area. Above it, there was a 5 minute imbalance that sort of served as the first presented 5 minute fair value gap. It was the very first 5 minute gap of the week. And as we moved down through that earlier on the 15-minute chart, on all charts actually, you see how we traded down through that imbalance, traded back up through it, and the bodies closed in the discount of that range. I feel a little bit phlegmy this morning. But the bodies closed in the discount of this range. Tapped the consequent encroachment, just traded above just a little bit, and then began to close lower, right on the lower end of that imbalance. And then we dropped away from it, closed here. This is just prior to the close on Wednesday's session. Rallied, went into the close. Here in the post market, we had the Asian session, the London session. Then we dropped down below those two sessions, taking out the high and the low of both sessions, created a new sell side liquidity pool, rallied again back into that very same range. The high of this wick is equal to the high of the London session. We just tapped that level precisely. That should probably be giving me some inclination as where price should go. But again, I am not going to front run my trade this time. Even if it starts to spool and go in one direction for the rest of the day, I'm not going to get involved with it. And it's not because I had some, and I think this is what I was waiting for, is that I was going to have some epiphany where I was going to be trading one day, take a trade. It was going to run 1,500 points, best trade of my career. And because of that success, then I was going to be a changed man forever. And then I realized that that's not going to happen. That's not going to be the way that it happens. And I think that that's a relationship and a conversation I've been having with the market lately. And that is that I have to pay for that experience that stopped out. And I don't pay for that experience not necessarily through pain, but literally through just the patience of growth. The patience of growth, not really the pain of cowboy style maverick trading, gunslinging, guns blazing trading, but like a farmer planting seeds. Every seed that a farmer plants doesn't grow. And sometimes it's the soil, and sometimes it's the water, and sometimes it's the nutrients, and sometimes it's the sunlight, and sometimes, right before it's harvest time, a storm comes and hail just he falls out of the sky and beats the crop into the ground because that's really just the kind of world we live in. But you have to replant your crops. We have to get back in there. You have to retill the soil. You have to go buy more seed. You have to do all of those sorts of things if you ever want to see the benefit of all your hard work. And it is not a maverick thing. People learned from a long time ago. It's not about just scattering your seed wildly across the field, as much as it is about having rows planted with purpose. You see how we ran out that stop loss and then we turned over and dropped right back in? I am very curious about what's going to happen now at 9:43 a.m. On the 15-minute, I was looking at the higher time frame, who I call 15-minute higher time frame. Everybody knows that it's not a higher time frame. It's higher time frame than a 1 minute, but it's intraday price action. Thank you. But it is intraday price action. Mm. Mm. What was I thinking of? I was thinking of this. And as I was watching us close below these levels, there are two things that I get confused. And I'll share that with you right now. Oh, you asked. I know you asked me to share this, so that's why I'm happy to share it with you. Do you ever get confused between a market structure shift and having liquidity run out? Right? You ever get confused between which is which? Like a market structure shift is normally, I guess I'm assuming it would normally happen higher in the range. However, we're always thinking of the lower time frame. On the higher time frame, what does a market structure shift look like? Right? Like on an hourly time frame. We ran down below this level, we closed. We ran back up to this level, and then we took that high out. This was not a market structure shift. We dropped into this level, closed. Not a market structure shift, was it? Or was it? Then we run back up here. These areas close, but we don't take this level. We may have run liquidity out above some of these highs, but the bodies close here. And then we have a lower close here. Wait, we have literally a lower close here, lower close here, close lower than here. Then we drop down and close lower than these two close lower, between these two lower closes. And then we go into that accumulation, right? So it's it's that, right? It's that. And so that's the thing that I was considering is this the market structure shift on the higher time frame? I'm looking at an hourly chart. We finally broke down below these levels and began to close. Now, where's displacement, right? Where is the displacement? Can I consider this displacement? I'm not sure because it's equally, right? These two levels literally like twins. And the only thing that's different is this area ran lower, but even on the hourly chart, this closes above this level. Now this level has closed below both of these. So those are the things that I question myself about. Am I watching higher time frame market structure shift? I also noticed something here on the hourly chart. It's extremely long wick, and this wick that's overlapping, and how the high of this wick intersects with the low of that wick, all at the high of this gap area. That's a lot of touching. That's a lot of touching. And the way that those is the way that's like fingers, right? It's like fingers reaching toward each other like this, making these connections. Is that the handshake, right? Fingers reaching toward each other. Boom. Let's go to the lower time frame and see if there's anything for us to see. I was just really trying to allow myself to chill until we got to this time frame. How close to 10 a.m. is acceptable? You ever ask yourself that question? Oh, yeah, you know what? I don't trade for the first 30 minutes of the day. Is it 30 minutes every time or is it 28 minutes, right? Is it 30 minutes or is it 25 minutes, right? Or is it one of those things where you learn, where you say to yourself, um, where you might say, hey, look, stop color, boom, there's my stop color. Okay, great, thank you. Or is it one of those things where you say, look, I had an area of interest that I was targeting, and then we began to break down through that area, and when I felt comfortable within range of 10 a.m. that we were going to be good, I was like, yeah, 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 okay. The bodies of the down closed candles in that CB are, I want to say they're just shy of consequent encroachment. And I have to say it like that because I haven't measured it. Control Z. I really haven't measured it. If I wanted to measure it, then I would say boom, floop, pop, sloop, bop. There, those two aren't connected. These two aren't connected. Bam, plop, boom. Neither are they connected on the top. Blop, pop, sloop, bing. All right. At least we have that kind of ironed out as to what I was targeting. It all happened inside of the 930 range. So that's 931, that's 934, and this is the first presented. What about that 930 level, Grady? That first candle off 930. Well, look, we can't have those every day, can we? Or is that the new thing? Is that a new fashion of something we have going on? Where we're targeting the first presented fair value gaps, 930 gaps on a regular basis now? We're down near consequent encroachment. We're tapping consequent encroachment here. We've slid to it, to it, into it, into it, into it. Hmm. 9:49 a.m. The macro begins in 30 seconds. Give me a 1-2, thank you. Just wanted a little more real estate, kind of clear everything up. I know it's kind of difficult for people to see this stuff, on a chart that's so far away. AMD. Do I really need that? Yeah, kind of remind myself. Hmm. So once we drop down into this imbalance that we had marked out yesterday, this is the 15, the 5, and it's a very light, right? It's a very sort of a light imbalance that I have back here. Once we mark this level out as the daily gap, and we drop down and we ran down below consequent encroachment and we pop back up. Were we looking for price to slip more, or were we looking for price to run back to the upside? Yeah. Oh boy, 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 oh. Right, and this is exactly why I keep these sort of charts up like this. 15-minute imbalance, blase skippity doop doop, zimmity zim zoom zam zam. Right? That's what everybody always says. Oh. Mm-hmm. I'm gonna write a note. I asked this question yesterday, and I need a real answer to it. And the real answer that I need is it deals with macro. And I have to go this weekend. I have to study everything I need to know, everything I can find on the macros. What do the macros signify again? What do they represent? Like, what do they represent? What are macros for? Right? The macro. You know what I thought it was? I thought the macro used to run toward the the entry zone. That's what I used to think. I used to think macros ran toward the entry zone. I didn't think macros were the entry zone. Excuse me. And I know we just kind of popped up right here. And I didn't think that the macros were the entry zone. I thought macros fired off prior to the entry. Let's say we're running to an area at 10 a.m. At 9:50, the macro begins so that by 10 a.m., 10:15, 10:30, 11:30, that by the time we got there, we would have left a particular area that the macro originated from. And then when we arrive there at that particular time, then the setup is developed at that point, right? That's what I'm thinking. That the setup would be developed after the macro forms and fires. So today it's 9:53 a.m. and we had this accumulation. We had a drop down, and that's definitely accumulation, right? We didn't really move through a range. You consolidated all the way through Asia and London. Okay, cool, Grady. You could probably say that. Then we drop down, we rally, drop right back in, and then we pop up at 9:50. 9:50. Right? And I'll say that right here at 9:50 flat. 9:50 flat, we break this range, we find the close above these highs, and then drop right back in, and then we continue to trade higher. Okay. Mm. But I don't think that that idea of the macro is I don't think that that idea of the macro is always the same. I don't think that when you think of a macro, that is the only definition, right? So you go to Merriam-Webster and you pull up a word, right, on the internet, you know, react or reenact, right? Then you'll see that that word has multiple definitions depending upon how you're attempting to use the word, right? So maybe the macro is the same way, but I don't want to confuse myself. I just want to say that it is the point that price begins to react at between 10:10, 10:50, between 9:50 and 10:10. It's the first point that price begins to react. And I believe that it targets um an PD array or area of interest, right? Hmm. The pre-market level that price reacted to was roughly here, which is the low of last Monday's Asian session. Is that what it is? Last Tuesday's Asian session, right? This is last Tuesday's Asian session low at 20,044.50. You tap into it, you tap into it. We put a wick into the discount. Now price is moving to the discount of that Asian range. Okay, we just run to the low of a prior new day gap. New day gap low just below consequent encroachment. Oh, blah, 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 blah. All right, let's see if there are any higher time frame areas of significance. We're coming into the opening price of a 4-hour up close candle. Penetrated. We blew through that new day gap. We are in the premium of that Asian session. Yeah, I don't. Yeah, and it's 9:57, right? So I'm telling myself, hey, I'm gonna wait till 10. I'm gonna wait till 10. I'm gonna wait till 10. I am going to wait till 10. 2 minutes left till 10 a.m. And as you can see, whatever that, so-called first 5 minute first presented gap that we saw from Monday, we just tapped the high of that level. We traded through this level yesterday at yesterday's close. Just above it is a 1 hour SIBI. that we've been holding on to for just a moment. We consolidated through this area, rare area, in yesterday's pre-market. Then we kind of just rallied away from that, and then handled business. Hey, hey, hey. Okay, now the next level we're coming to that I have, that I'm watching is going to be that opening price for the week. And I think this is a very insignificant, very, very significant, not insignificant, but this is a very significant area. And the significance of this area is it is the opening price of the week. Everything below this price means it's a bearish week. Everything above this price means it's a bullish week. So as we get closer to this, this is again a flat week, not a flat hour, not a flat day. This week is flat. That where we open is exactly where we are right now. So it's really crazy because this could be, this could propel us in any direction, or we could just continue to consolidate. For United States existing home sales reported 4.00 million. 4.00 million. We were looking for 3.9 and we got 4.0. Okay. Okay. I'm gonna mark that. But we're down from what? What was the prior we're down from, let's say the previous was 4.02. Okay, no, we're within range. It's nothing dramatic. There's no huge dramatic swing in those levels. You know what? That's crazy. I just refreshed this. And the forecast prior to my refreshing says that we were looking for 3.9. Now it says that we were looking for 4.05, and we only came in at 4. That's interesting that there was a last minute update to the system. Watch, watch everybody. You have to watch. You have to watch this stuff. We're at the low of the new week opening gap as we just trade, or as we're trading up to the opening price of that new week opening gap. Uh-huh. Okay. It's just a little bit after 10 a.m. Just below the new week opening price. 10 minutes left in the 15-minute candle. We're looking at 1 minute and 22 on the 5. That's that. Here's that first presented 5-minute gap. The high of this candle is just below the new week opening gap. I mean, no, sorry, the new week opening price. The opening price for the week. Mm-hmm. All right. Okay. Here we are. Here we are. Do-do-do-do-do-do-do. One of the things that makes trading one of the most difficult things is there are multiple disciplines overlapping each other all at the same time. Most people are good at there's a consequent encroachment of that 15-minute gap to the left. We're making a relative equal high with the highest wick in this range. Closing, closing, closing. And one of the things about it that makes it one of the most difficult things to really, really master is that's consequent encroachment. We just tapped consequent encroachment of yesterday's London session. And we pulled away from it aggressively on the 15-minute chart. We're down below the high of that Asian session that we had targeted in the pre-market now. Looking here at 21,301. So an entry is different than trade management. It's a different discipline. Risk management has multiple layers to it as well. Not taking a lot of trades or um, taking your time to be patient and wait for proper entries or uh, tracking and stalking your entry. These are all different disciplines. They all take a different, to me, they all sort of have a different element or different part of the brain that you would use in order to execute it properly. Almost like standing on one foot, right? You would be using some part of your brain to balance yourself, right? Then, as that muscle will get tired, then you would use some sort of a fortitude section of your brain to just tell you to keep holding on. And then someone would hand you a flute and say, play the flute. And then you're trying to play the flute at the same time. And then they say, okay, while you're playing that flute, uh, wink. And so all of those different skill sets all incorporated at the same time. Either you would do them sequentially, stand on one foot, then stop, then pick up the flute, then stop, then wink, then put, one foot, you would do it like that, or you would attempt to do them all simultaneously. You attempt to do them all simultaneously. You attempt to just stand there. Excuse me. I am getting just this nasally scenario going. Yep, weather's changing. You would stand there and then you would what? Blah 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 blah. Right. Kind of distracted myself there for a second because I'm watching as we're coming to consequent approaching of this gap that we had marked out for several days. This is an hourly gap. Now, by show of hands, how many people believe that we're going to spool from this point through the entire range for the rest of the day, and that we will not trade up into the lows of up close candles, and they will not uh, resist price? How many of you guys think that, right? By show of hands. Because it's 10:08 a.m. and next 2 minutes the macro will be at its end. And I think this is also going to show us exactly what the how the macro serves. Because a bullish macro and a bearish macro don't have bullish and bearish allegiance. Because I've seen that too. That the macro will send price higher for a bullish fair value gap above the macro's price and not the idea that the macro would send price down to a bullish gap, right? So you can make that V-shaped reversal. 10:10 a.m., price is doing something. Pull back from that level, you drop right back down below the weekly open price. Now I'm green light to trade, right? Green light to trade here. Excuse me. And that's what he puts on the screen? What is this guy thinking? Oh, 5 minutes, 15 minutes. Mm. I don't think we're going to come back up here and take me out unless we're going to hit my stop loss. So, I mean, am I looking at a market structure shift? Right? Did we really shift? We seem heavy. Time of the day seems right. This could be extremely bullish at this point, right? So it could be extremely bullish, but this is where we are. This is where we are, and I didn't really take notes. I just drew some flowers on my paper. On the 15-second chart, we see how price is devolving, right? We see how it's coming down, coming down, it's coming down, coming down, it's coming down. That's great. Before it really just dropped in, I really wanted to see that last long wick to the upside. You know the one I'm talking about? There's this wick that runs to the upside right before price does right before price pop pop whip. Mm. There's a wick. Mm, mm, mm. There's a wick that normally flashes to the upside before price begins to decline. Excuse me. And yeah, that was my expectation is that we would see that long wick. Now, I know what you're thinking. I know what you're thinking because I'm thinking it too. Dude, dude, that was a great entry. That was a great entry. And it was. It was. But remember what we talked about before we began to trade today. The idea is, the idea is that if we're going to be profitable, This is the cost that has to be paid. It does not have anything to do with any of those other concepts and ideas about what we're thinking about when we're thinking about trading. It's that we see our entry traded to, and it speeds away from us. And we say, am I gonna chase it? Or will I wait and see whether or not it comes back to us? We drop right back into this imbalance. We close above consequent encroachment. We close above consequent encroachment with wicks to the downside. Then we move in further. Oh boy. All right, Jimmy. Now, I'm gonna tell you this is the part that causes FOMO. You see this? This is the part that causes FOMO. This is the issue right here. This is the issue. That number on this, that number is the issue. Between this high, where that sell stop is, that sell limit is, the limit order is, and that low is that amount, right? That's the deal. Moving the stop loss down lower puts us at risk of price just running higher back into these areas, back to these ranges, back to the high of this up close candle, touching anywhere in the mid body of this candle, touching the low of this candle, doing all those sorts of things. And we don't want to get caught getting short this low in the range at this point. But Grady, if it's already begun to kind of peel away like this, aren't you really just watching the trade that you've been waiting for all day happen? We all think that, right? But what do we learn from this week of consolidation? We learned uh 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 we learned not to trust our instincts because the consolidation teaches us not to trust our instincts. That's what's called dulling your edge. Your edge is dull when you trade through consolidation. It's I don't know if it's programmed that way, right? We talked yesterday about the hypnotic nature of the way consolidations operate. They give you a high, then they give you a low, and then they take those highs and take those lows. Then they fail to reach those lows and fail, right? So all of the elements that we would be looking for in a extended trade or excuse me, or in a trade that we would anticipate would um, develop over time, those elements aren't there. On the 5 minute chart, this is my concern. On the 5 minute chart, whether or not we're just dropping down to this 5 minute gap, to close in this 5 minute gap to create higher pricing. That's my true concern, right? Excuse me. We chased a trade like this 10 times in the last 14 days. And every time it popped up like this like this, I would get short, pull in my stop, and then we would run it, right? Almost like this, right? So if I would have tried to get long here, it would run it, go long. I would try to get long here, it would run it, and then go long. But this is the opposite end of it. I want to see 5 minute upward candle. And the thing is I might not see it. I may not see any 5 minute upward candles, and that's the scary part for me. We've crossed this entire gap. We're trading off the high of that down close candle on the 1 minute chart. We're touching the wicks of it. We've been trading in those wicks. 16 seconds before the next 16 seconds before the next 5 minute candle. 16 seconds for the next 5 minute candle. Let's go. Let's go. 16 seconds before the next 5 minute candle. So this 5 minute candle closes here. Are we going to see any part of a rally before a price declines? Nope. That's sad. And the sad part is I'm sitting right here. The sad part is that I put my entry in. And the sad part is that it's probably gonna run to my stop, to my take profit. Oh my God. Hmm. What am I going to do? 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 What I want to see in the next 5 minutes is I would love to see this 15-minute candle give us some type of a move to the upside. Any movement to the upside. Probably placing us somewhere in this range between 20,293 and 21,285. I missed it. I hate chasing trades. I can't catch them cleanly. I can't catch them cleanly. And this might just be one of those things where I'm watching this and this is exactly, exactly what I'm going to have to just deal with for the day. Not being able to catch the trade cleanly. And if I move my entry and we came back and just literally just touched my entry just as a retest of the 5 minute high or whatever, that would be a burner and that would mess my mind up. You know what I mean, right? Like price just turns over, runs back up, runs to the body of this candle and then plummets. Can't deal with that. But price is beginning to descend rapidly now, and I'm not on board. It's giving me nothing on the 1 minute to hold on to. No ledge, no cliff, no foothold, nothing. It's all on the 15-second chart, and I can't trust that because the higher time frame is going to do what it does. In 2 minutes and 28 seconds, that 15-minute chart is going to do what it does. And I'm waiting for 15-minute candle to open, push to the upside, strong, way up, way up, way up, and then we're going to hit a level, and the area that I'm looking for is up here. This is the area that I'm looking for. It makes no sense why we would trade up to this level. Oh boy, I missed it today. And there it is on the 5. Right? See that little 5 minute little on the 5 minute? There's something right here on the 5, right? Oh, pull that forward, right there. Oh, silly, 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 silly me. Entry should be here. Makes sense, right? No, it doesn't make any sense. Well, the idea is that we would run if we traded back to this gap, that we could put a wick as high up as this, trade back into that gap, close lower than that gap, and then move down. Gap, 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 gap. It's just weird, right? Gap, gap. 12 seconds left in the 5 minute, 15. Oh, no, that's not right. 9 seconds left in the 5 minute candle. Untethered decline. Untethered decline. Not just no thing, nothing. Just an untethered decline. It's 10:25. Um, is there an entry pattern that's forming right now that I'm not familiar with? Is this thing on? Man, uh, uh, oh boy, oh boy, oh boy, oh boy. It's just one of those things where you just grit your teeth like, oh man, that's $1,500 right there, yo. Like that's like 1,500 from where I started, right? 1,900, 1,800. And then I said, oh yeah, no, I think we're gonna go down here below the low and take that low out. From that point, missed that entry. But that is the cost to pay. That's the cost to pay. That's it. Greedy, impatient, impulsive, right? Which one of these things is going to get in between us and this type of a trade the next time? Fear, hesitation, right? What did I expect to see today? I expected to see a higher high, a lower low, and then right. Those are the things, not V shaped, but we were prepared for V shape because well, that's what we saw: a high, low, higher high, low, lower high displacement. We got right in there. We put our stop entry right there, and then we did not click sell. And all we needed to do was click sell, and then we'd be up 2 grand, which is funny, you know, which is really funny. It's very funny that in the stock market, in the futures, it's very funny that it is easier to lose 3 grand than it is to make 3 grand. It's easier to lose 6 grand than it is to make 6 grand. And I was listening to a kid talking about this the other day. He said it is so strange because you think it's 50-50. It's either up or down. How could people not how can people not have a 50% outcome up or down? Not, because 50% outcome would say for every one time that I'm right, I'm wrong one time. It would be as simple as having a 3 to 1, right? It would be a 3 to 1 risk to reward. And if I'm right 50% of the times, right, half because it's either up or down, then that means that half of the time I would be up, uh, let's say $1,000, and the other time I would be up 1,500, 3 to 1, and the other time I'd only lose 500. That means regardless, for every two trades, I'd be making $1,000. But it's not like that. It's literally like For every 10 opportunities to get into a trade, for me right now, I have one trade that goes maybe 10R, right? And then the other trades go like 1R. No, I lose like 2R, 1R, right? I lose 1R. So it's like I'm losing 9, 10R, and then I'll make 11R on a regular basis. And you'd say, well, that kind of sounds profitable. But it doesn't, because in that time frame, your account is blown blah, 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 blah. Your evaluation is blown, right? We dropped down to a gap on a 55-minute chart, and then we just kind of popped back to the upside here. And this is the only thing that they gave us. And I was looking for this. I was looking for something a little more substantial. I really was looking for more natural, healthy price action that undulated in a regular format. If that makes sense, I don't want to see straight lines up and down. The only time I want to see a straight line up or down is when I'm in a trade, right? If I'm in the trade and I am bullish, I want to see the straight line to the upside. If I'm bearish, I want to see a straight line to the downside, but not before I enter. Before I enter, I want to see very clean, casual price action coming to my expected areas. We declined, close below, wick up, wick down, turn over, ran up the body of this wick. It's 10:30. Mm, 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 mm. 4 minutes in this 5-minute candle. The first thing that we did is we turned over and we rallied up to the upside. There's an imbalance here. There's also an imbalance here. So we have these two imbalances, this one and this one. When we drop down into this imbalance, we close here, wick down, traded back to the low of this gap, a low and formed this gap. Then we traded low, consequent encroachment, moved down to the outside of the imbalance, traded back into the discount range of this imbalance. 3 minutes and 19 seconds left in this 5-minute candle. Toward the end of this candle, I would be looking to enter. The low of this 5-minute candle is resting on the high of the London session. The price right now is at the very bottom of the Asian session. This is sitting right on like Asian session pre-market level is right here from what day is this? Wednesday. Last Wednesday's Asian session low is right here. We traded up right into it, tapped it, dropped right down to London session high here. We're tapping London session high. We're right between those two ranges. I think this is going to be the only retracement that I was going to get. I hate to say it like that. It's a minute and 30 something seconds left there. We pressed deep into the Asian session range from last Wednesday, all the way into the premium. So dropped all the way out, closed below the low. We're back into the discount low here. Ooh, 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 ooh. Hmm. I think some of these entries would be speculative for me. I'd just be speculating. Where is that Asian session high? Do I think we're gonna run and touch that Asian session high here? It is right there. Asian session high from last Wednesday is there. The consequent encroachment of the next Asian session is right here. And then there's space between the two is roughly right in here. And then there's London session low again there. Oh, man. Again, 30 seconds left in this 5 minute candle. I believe the next 5 minute candle is going to tell us everything that we need to know. As much as I love all of that, I believe I should have just brought my stop loss down to here, brought uh my risk down to here. That's a lot of risk. I don't think I can do it. I don't think I can do that. I think I have to go right to here and just wait. I don't think I could do that. I'm waiting for the next 2 seconds for this next 5 minute candle to open. If I don't get in, I just don't get in because I can't seem to parse out where to place my risk at this point, or whether or not I'm watching b- um, a bullish move play out. It's rejecting at all of the areas that I wanted to see it reject, and then it's dropped back into the areas where I wanted to see it drop back to. On like the 5 minute, because we ran all the way past this imbalance down to here, that's it. That feels very bearish to me. We respected the consequent encroachment on the Ferris pass. That felt very bearish to me. This is probably something that I need to have a few more weeks of data on before I could really make a definitive statement, as far as that would even be something that I should respect. Although we see that we touched that low precisely and then we rejected. New 5 minute candles open. We rallied up just a little bit. Now let's watch and see whether or not we just push through this entire range. There's a small imbalance here on the 5 minute that was stuffed open. I do not see an imbalance here on the 1 minute that would be significant enough to draw price. So we could have just dropped back on some sort of a 15-minute time frame scenario and then, moved back into the rally higher. That could definitely have been the case. If that were the case, though, I would have definitely wanted the price to push through the ranges that it stopped at, right? If we were definitely going to rally higher or move higher, this area stopping here and then rejecting and turning over, coming back in, I would not have wanted to see that because it's not showing me that type of intensity to say, no, we're really going to rally. We're going to push through that 15-minute hourly gap to the left. We're going to push all the way through that. We're not just going to scoop into it slightly. We're going to get into it deeper. Okay. All right. 5 minute candles. Okay. Okay. 5 minute candles. All right. Show me. Just show me. Right. Well, yeah, come on. So there's a few minutes left in this 5 minute candle. And I'm just watching here on the 1 minute to see whether or not we drop down below these areas or close, or whether or not we're just going to put wicks down into these down close candles, finding support here for a move higher. I'm not in any trade, and I'm just still watching. Still watching. The area where I wanted to get short, this is where I would be attempting to hold my position. Because price comes back against you, you start getting all nervous. Oh my God, it's come back. It's came back. Right? I entered here. It was 2,000. Now it's back to 1,000. Now it's back to 1,500, 1,700. That sort of stuff. 46 seconds. There's a minute 15. Mm, 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 mm. I don't like all of the wicks. Wicks throw me. Wicks throw me off. Wicks throw me off. This wick touched that wick. And there's those fingertips touching again. And then we moved down lower. I had thought of moving my entry down into this range somewhere to see whether or not we could get triggered in. Excuse me. Okay, so 5 minute imbalance, 5 minute first presented fair gap value gap from several days ago. We hit the low of that and immediately rejected. Many of the opportunities that I've been looking at have paid off. Does that mean the next one will? Does that mean that the next time I think I see an entry, I should just take it? Nope. Does not mean that. I don't get fooled. You can't get fooled like that again. And that's funny is I will do that though. I will say, dang, every time I thought short to get short here, I should have just took it. I should never have doubted. But the low of this imbalance here, I should have just took that trade. I never should have doubted. And then I would say to myself, oh, the next one I see, not gonna doubt it. I'm just gonna take that trade. Stop that. Okay. Do we see an imbalance right here? Here to here. Move forward. Do 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 do. Depth, depth. That's what it is. It's depth. It's not shallow. It is not shallow. It is deep. Not shallow. It's not surface level. It's not surface level. It's not the appearance. It is a deeper thing. Series of resets, series of commitments, series of debates and deliberations. It is deeper than that. Here, here. Pull this forward. Mm, sorry. I'm going to put on a trade here, and I'm going to put my stop loss here. It is 2 minutes and 20 seconds left in this 5 minute candle. And we ran that. Hmm. And you asked me, why did I do that? Well, I just did that because we traded this level and then we broke down and we closed down below this close and then we returned here. And so when we returned to this level, right, we trend into this up close candle here is what I was watching. Well, I know I closed that trade clear created that gap, but this is also what I was watching, the wick of this up close candle, traded up. I got short here. We're going to continue through this level. This is where I got short the first time. It does. That seems a little more satisfying to me right now. Now we're watching this level to see whether or not we hold and commit to that range. We have 36 seconds left in this 5-minute candle. We can reverse and come right back against us. That's, and that's acceptable. Why? Because we already put one leg, two legs, three legs, four legs into this zone, which means it could be an area of liquidity that we're going to source, many more times before the day is over with. It's 10:45 in 10 seconds. My stop loss is not above the uh, closing price of this up close candle. So if we retested this level, the low of this zone here, then it would stop me out. And it's not that far away from there, although the range seems to be a bit extensive. Let's see if we come all the way back through this level and stop us out. And we do. That's right. Now I was up $400 and I just could have taken that and gone about my business, but I did not. We've seen weird stuff happen lately, and weird stuff like, retesting wicks, retesting highs, and then price never, never truly respecting those. I call them rules, but never really respecting those rules, right? They would just run those levels and continue to run those levels and not really respect those rules. Normally, I would see price run the higher of the prior up close candle into the wick, and then once price closes down below that candle's low, that the entry would be on the next candle's rally to the upside. And then on that next candle's rally to the upside, price would break down and close down below the level and begin to move lower. But again, that's only if we're truly bearish. If we're bullish, then the only thing we did is drop down into this level, target this level. These low closes are hard for me to explain because I wouldn't imagine that we would have such low closes on a bullish run, right? Because it just looks like we're closing lower, closing lower, closing lower. My expectation would be much more like what we see here on the 1 minute, where we have higher closes and much less lower closes. We're back at our entry price after targeting that wick on the 5-minute candle. We're a little bit later in the 5-minute candle. Now we have to watch and see whether or not we can violate this low, this down close candle. We run past it again. This is our second time having a $400 trade. And if it just returns and rejects on us, maybe we should just go ahead and take this, right? And that's our thought process. 203. It's so tight that we couldn't even really bring our stop loss to break even, because having our stop loss runner break even is extremely possible. We never did close down below this level, so that's another issue. We turned around and popped back up, but we really want to get down and break below all of this. And you can hear it in my voice. I'm like, look, hey, look, look, we're working today, right? We're at work. Okay, come on, baby, drop. It's giving us this feint. It's giving us this feint. It's giving us, excuse me, all of these opportunities to get out. All of these wicks, we tested the wicks. We tested the 50% of this wick. Here's the high of this candle. There's the low. We've done all of this. And there's not really much else that we could do in this regard, right? There's not much else that we could do in this regard except just continue to watch. Now, I am uh, watching the bodies. The bodies on the five are lower than the bodies on the one. Body close lower, that's a higher close. Lower close, lower close. We got 24 seconds on this 5 minute candle. This thing could make our day, or this could rip our face off. 1050. All right, I think we're gonna exit here. We're not getting we're not getting what we want to see. What we want to see is that's a nice lower close. 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 That's good. That's good. That's good. Yes, 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 yes. Yes. Come on, baby. Don't get excited and do anything weird. Don't get excited, do anything weird. That was a nice lower close. Who should be excited right now about this? Who should be excited? Should the trader be excited about this? Or should the trader just be calm and watch the price play out? The excitement comes from consolidation days. When the price consolidates on those days and we are filled with doubt about price and the way price is supposed to behave, then on days where we should be more confident in price delivery, then we're still comparing those days to consolidation days. We're still remembering those days, right? But we're not supposed to be looking. The only type of memory that we should be using is what? I don't know. Look, hey, dude, am I a billionaire? If I were going long at this position and somebody told me, hey, look, if somebody said, hey, look, Grady, if you're going long at a position and it's just sitting there in your gap and it's not delivering to in your direction, then you're on the wrong side of the trade. In this regard, on this 5 minute candle, is that true? Is that saying true? Grady, if you're sitting in a gap, right? Grady, if you're sitting in a gap and price is just in that gap and it's just sitting there and it's sitting there and it's sitting there, it's not going to go your way, right? Is that true for in this particular case, or no? Is that a rule to listen to? I'm looking at this imbalance and I'm saying, look, we're in the premium of this gap. The we have some nice decent closes down just below the midsection of the premium of this gap. And I'm looking at a 5 minute chart. Yes, I know. And 2 minutes. This is a crucial area. What's crucial about this area is this is the lowest time. This is the lowest run down below this, right? So it's like low, low, lower, low, lower, low, high, and then take out that low. This is making me nervous. Yes, I'm nervous. Come on, guys. Yeah, I'm nervous. Have you seen what type of last 2, 3 weeks I've had in the market? Yes, I'm nervous. I fumbled into a couple of good trades after watching a very beautiful trade happen right before my eyes and not do anything. You know, I'm not thinking that the market is anything, you know, there's anything weird with the market. I'm saying that I don't, yeah, I'm traumatized, traumatized by the market. I've been traumatized by the market. I have been traumatized by this thing. Ah, and yeah, I'm just having a little bit of that little stress, just a little post-traumatic stress when it comes to this thing. All right. 33 seconds left in the 5 minute candle. 5 minute gap. You know how beautiful a 5 minute gap would be if we stretched down here and just created like a nice little 5 minute gap. Nice little opening, and then a nice another just a gap in between the low of this candle and then the high of the next candle. It just starts to stretch down, stretch down, stretch down in the next 5 seconds. Right. So something like that. Something like that. Something like that. But do I want to see this gap close with this candle or no? Do I want to see this thing stretch just a little bit more? Maybe a 15 minute gap would be more appealing at this point. Watch this. Pull that high forward. See how we touched that high? Moving my stop loss down to just a bit of give me back, right? Believe this is like the first presented gap here. That was a bearish gap. This would be lovely. That we would trade down to the consequent encroachment, trade back up to it, then deliver lower. 11 a.m. will be here in 4 minutes. We're at a high down close candle on the 15. Okay, this is the 15 second. We don't need that. In the 15 minute chart, there is a down close candle here. We're just come to the high of it. What we wanted to see is us run down below the consequent encroachment of this gap, trade back up to it, and continue lower. To and through is what we're looking for. Ah, okay, okay. Maybe I'm just gotten just a little bit greedy, and that's what all the only thing I was gonna get, Nate. Maybe that was it. Maybe I was greedy, and that was all I was gonna get. And the reason I said that is because I was looking at this sort of price action, right? So we're looking at this gap in the overall higher time frame, and I haven't really moved my stop loss just yet, just giving it a chance to breathe. There's 1 minute and 23 seconds left in this 15 minute candle. We just popped up and we are at the 4 hour opening price. We're inside this morning's London session. London session high is where my stop loss is. So maybe I should have tightened that up just a little bit and stopped out before be a part of the overall move. Yep, stopped out before I could be a part of the overall move. And it's just one of those things. One of those things. 1200, why didn't you take it? When you saw us hit that down close candle, why didn't you get out? Well, that's not how continuations work, friend. That is not how they work. It is, yeah. And as soon as I started checking levels to see, dang, is this a spot where I might get stopped out at? That's when price was like, yeah, buddy, it is a possibility that you could get stopped out right here. 2 seconds, 1 second, quick little rally to the upside, hit the high of that gap, hit that's Asian session low. Asian session low was there. Just popped up to touch that level. What am I looking at? What is that line? What is this line? I know what this red line is. This red line is that gap. This is the wick of that 5 minute candle. The low of this level is the high that retested that 5 minute high. I wanted to see us, if we hit that 5 minute high retest, I would wanted to see us hit that level, reject, and then come back to the downside after we retested the 5 minute high. Two minutes and 48 seconds. Just watching that levels, that 5 minute high retest. We traded into the wicks, then we traded back to the closing price of the 5 minute candle. I'm shaking my head because I've seen this trade as an entry work many times. It's just, I've seen us trade back to that level many times. And I was just thinking to myself, uh, right, like is this one of those times? Like, will my experience with the market pay off because I've seen us trade that level so many times? Or will I be using anecdotal evidence and, like, of my experience to um fumble me poorly into a trade, you know, because it's just, a retest of the 5 minute high is something that I mentioned a moment ago, or actually something I was looking for. 1 minute 60, well, 1 minute left in this. And instead of us moving to the downside away from that level, we had like a last minute rally to the up. Takes us out. We trade into the wickedest up close candle. One more time, 55 seconds. Mm. And I guess that consolidation nature isn't done yet, right? That consolidation nature isn't done yet. Okay, well, that's it. That's it for today. That's 50% of that 5 minute wick. We just traded right to it. Let's say if we go through it. 24 seconds left in this 5-minute candle. Mm, doubled over. Right there, right at it. Jeez. So if the market just flipped bullish on me, then I need to stop getting into the shorts. If the market just flipped bullish on me, I need to stop getting into the shorts, and that's just that it is what it is, and I have to really deal with that going forward. Like it is, that's what is it. That's what it is, and not. Oh, I'm targeting the wicks, and I'm targeting the 50% of the wicks, and I'm targeting wick highs and all that sort of stuff. And I need to go ahead and I just need to say, oh no, the market just flipped bullish on you, buddy. On this higher time frame, on the 15-minute, we dropped right back in. We hit that 15-minute down close candle. We popped up, and now we're doing something different. We're going to have a right. We're going to have a change in the character of the market, if that's the case. And if that is the case, then yeah, it's a clear sign that that's what I need to be aware of. It'll tease you. It'll tease. It'll tease. It'll just drop right back in. It'll drop back in just with this sort of a very fluid, forward moving, just it'll drop right back in teasing. It'll drop right in teasing. The only difference is we get to the low of this intersection and we blast right past it. That would be the only thing that would be difference between price just kind of teasing to the downside and then uh really being a part of the spooling daily movement that we that's our for me personally, that's my daily dream. I have a daily dream every day. My daily dream every day is to be a part of the daily spool. When Price says, look, we're going to go in one direction for the rest of the day, my daily dream is to be a part of that move. And every time it makes a pullback, it continues. But today, but today is it or is it not that day? Is it or is it not that day? It is not that day. I'm on the wrong side again. Look, I'm on the wrong side again. And that's gonna be it for today. That's gonna be it. It's painful sometimes it's painful to do it, right? It's to me, it's not a coin flip. It's just that I'm reading some levels wrong, and I'm reading the time of day probably wrong more so than anything else. I'm reading the time of day wrong. I had a beautiful move to the downside. We hit the gap, and there on the 5-minute chart, there's a gap in wicks, and we traded right to it. See it till just now. And then we popped up and bounced up right from that area right to where we are now. But, time of day, I've read it wrong. And if I'm reading the time of day wrong, I'm reading the direction wrong if I'm not paying attention to everything I need to pay attention to. So that's going to be it for today. Thank you guys for stopping by. Remember, like and subscribe. Like and subscribe. Support the channel. I know that, many of the channels that really get all of the likes is the ones where, you know, they're pulling in tens of thousands of dollars a day. But we're not there yet. We'll get there. All right. You guys have a great weekend. Well, a great day. We'll see you tomorrow. Bye bye.